Ashish with Investor Friendly CPA. Now this is going to be a little more complicated than normal videos I usually try to put out there. But this question is very important for every real estate investor to understand. They always ask me, can I use losses from my K1s, syndications fund, your investment to offset your other income? That's a very complicated question. And that's what I want to explain in the easiest way I can. But you do need to really rely on your own tax advisor to give you numbers and see how this works, because you will see it gets very complicated. So what I'm saying right now only applies for rental K1s, okay, rental real estate losses. It does not apply for any other passive losses you might get from your K1s, from your restaurant business, or I don't know, you invest in other kind of businesses, whatever business you're in, franchise. It doesn't really matter. I'm talking about rental real estate. It can be commercial, it can be residential, whatever in the real estate funds you're investing in. If you get a K1 with loss in the LP interest, okay, you're a limited partner in that deal, can you use that loss against your W-2 income or any other income? That's what I'm going to answer. The answer is yes, you can. But you have to meet a bunch of other rules. And here's a rule. Basically, you have to be a real estate professional. If you are not a real estate professional, everything is, you can just stop it right now. You don't need to know this. If you're already a real estate professional, then you have to go to next step and also meet a bunch of rules. That's what I'm going to talk about today. I'm not going to go over your real estate professional status, rep status. I'm not going to go over that. Hopefully you already meet that. Once you meet that though, how can you use the K1s and this LP interest losses that comes to you through cost segregations or normal operational loss? Can you use those to offset your other income? The answer is yes, but the rule is this, and I'm going to show my screen, guys, because what I'm talking doesn't make sense. It's complicated, but I want to show you one thing. Do not get hung up on all this chart and everything. What we're talking about here basically is there's a grouping. There are multiple types of grouping elections and what you can do. What I'm showing you here is this. You've already made the rep status on the top. Once you meet the rep status, you count your hours and everything, you go to step 3. This is what we're talking about. Can you use the LP interest and get the losses? This is how it works. For the limited partner, if you invest in the deal as a limited partner, for you to use the losses from those K1s, what you need to do is you have to have your own long-term rentals, or in a GP, in any other fund. You need to have your own rental, long-term rental. We are not talking about short-term rental. Rep status has nothing to do with short-term rental. We're talking about long-term rentals. If you already have other long-term rentals that you own, manage yourself, you've made the material participation. You don't have to manage yourself to meet the material participation. But what I'm saying is you have already made the material participation on your long-term rentals and you have 500 hours. You have to have 500 hours for this LP interest to connect with your other long-term rentals as one activity, and losses can be combined. Otherwise, it's going to be passive. Even though you are real estate professional status, the LP interest can be passive if you do not have 500 hours of material participation on your long-term rentals. Okay. Again, when I say long-term rentals, I'm talking about any kind of commercial properties too. And the rule is this. I have a rule here. There's a de minimis rule, by the way. If the whole activity is less than 10% of your gross rental income, then you can always combine. But I'm not going to go there. Most of the time is, you get a huge loss. It's not going to be 10%. The rule says that when you combine limited partnership interest into all your rental grouping, entire activity becomes limited partner, a limited interest. Meaning now you have to meet that 500-hour test. 500-hour test is basically you combine all the activities, long-term rental, and you have to meet 500 hours, materially participating hours on those interest, and then you can take the losses from your LP interest. I know this is complicated, and I haven't even gone through all the look-back period and 10-year tests. We can also use those tests. Normally it doesn't work. So this is the only way most of the time a limited partner can use losses from your K1s against your other activities once you qualify as real estate professional. If you do not understand this, please talk to your tax advisor. If you understand this, still talk to your tax advisor, because there are other things you need to discuss. But that's the rule. That answers your first question. Can I even use that? Once you understand that, okay, it's possible Okay, what are the other things I can do? Is a grouping election? Can I group all the other activities on the top level to qualify as reps? There are a lot of other questions that needs to be answered to meet the rep status too. I understand that. So that's why you got to work with your tax advisor. Okay, thank you.